Hello, friends. Today we're taking a look at Kroger, ticker symbol KR. They are going to be reporting this week on November 30th, and this is a company that analysts believe that has a 20% upside if it were to get to the $52 target that they have on it. Just a little disclaimer, this is a company that I have a small position. I have about I think it's 2.5% of my portfolio on it. I also own Albertsons, and I'll be talking about their merger or acquisition coming up. And in the past month, they are up 1.2%. Year to date, they're down almost flat at 0.6%. And in the last 5 years, they are up for 46%. But as you can see, since 2021, they have been kind of being flat, even though they had a big jump somewhere between at the beginning of 2022. So they give a dividend. They pay $1.16, which is about 2.63%, and they already went ex-dividend. So we're going to be taking a look at Kroger. Some of you guys may not know. Kroger is a group of, they own a lot of different brands of supermarkets and pharmacies. Some of the supermarkets, they have pharmacies in them. Some of them, here are the brands. You may be well familiar with them. For me, I used to when I lived in Wisconsin, I used to buy in Pick and Save. I have not been in a Kroger. I know of Mariano's and Baker's. And so here are the list of all the different chains that they own. Now they're looking at adding Albertsons. And what they're thinking is there will be going from about 2,700 stores all the way to almost 5,000 stores. So that will be almost a doubling of that. They will be going from a $30 billion sales of their in-house brand business to about $45 billion, which is a 50% increase on that. And so there is a lot of great opportunities of growth that they're looking at. Their earnings grow about at 3 to 5%, which is a little low. But I am looking at their model that they're looking over here is that they might grow on the first 4 years, about at 8 or 11%. So this will be a group of companies that I own. Albertsons, like I said before, I have a full position, which is about a 5% of my portfolio on that. I have a half position on Kroger, so I'm kind of double dipping over there. And they're looking for a strong cash flow for the next 4 years. They have been having some issues with regulation in which the government is trying to stop their merger because they think that is anti-competitive. So if you want more information, I will highly encourage you to do a little bit more research before you think about buying this. Just once again, I am a YouTuber. I'm just sharing my thinking behind owning these companies. I'm not encouraging you to buy anything. I'm not your financial advisor. This is for educational purposes. So when it comes to GAAP EPS, they had a big miss last time of almost $1.15, but normalized they beat. Their revenue was also under $266 million. And right now, on the upcoming quarter, they're looking at a 90-cent EPS with a revenue close to what they predicted last time at $33.9 billion. In the last 90 days, they have had 3 upside revisions and 13 downside. They have brought the expected EPS down. So let's jump into the numbers. As you can see, revenue, they have been growing in the past 10 years about 8%, and in the last 5 years about 6%. I like that the two numbers are close. It tells me that there's consistency there. When it comes to earnings, there is a little bit of up and down, especially in 2018, 2020, and 2022. But as you can see, they kind of have remaining flat. Most of the growth happened in 2013, 14, and 15, and that is what it has. Why the 10-year average growth is 4%. Profit margins in the past 5 years average is been of 1.5. That's really low. When you're looking at the free cash flow margins in the past 5 years, that's also 1.4, which is very low. I will, even though the 10-year average shows at 13% and the 5-year at 25%, I will not be paying attention to that. As you can see, there's these 3 outliers. So we're looking at almost also a flat growth there. When it comes to book value per share, they have been growing nicely at about 11% in the last 10 years and 8.7% in the last 5 years. Return on equity is a nice 23% average in the last 5 years. Return of asset a little bit lower than the 5% that I like. Same thing with the return of invested capital at 8.7, which is lower than the 10% that I normally like. When it comes to dividend, there has been a little bit of a dividend growth in the past 10 years of about 9%. There was I think it was a special dividend on 2018 that brought this up. When it comes to debt is higher than I normally like at 5%. Not 5%. It has grown about 10% per year in the last 10 years, or 11% in the last 5 years. And if they were to use their average 5-year free cash flow, it will take them about 7.5 years to pay their debt. However, remember that that has these numbers. So I think if we do a quick calculation, if we looked at, let's say, $26 of debt per share, and an actual average of somewhere around $250, divided by 250 average, that's actually a 10.4 times of debt. And that is something that I am worried about Kroger. They have been paying down, they have been buying their shares down at about a 3.5% and in the last 10 years and 2.3% in the last 5. And so here's a summary of their financials on the past 5 years. Analysts are thinking that they're going to grow about 8% in the next 5 years, which is close to what they are talking about in their investor presentation. When it comes to multiple, In the last, if we were to look at the historical multiple valuation, we are looking at a fair value somewhere between $46 to $50. If we look at the payback time and we were to look at the average free cash flow growing it at 2%, that will be somewhere around $53. And if we use the number that we were talking about earlier, that would be close to $46. When we go to the multiple, the discounted earning valuation growing at a 5% again, we're looking at a multiplying it for a 14 PE and discounted it back. We're looking between $20 and $25 per share. And whenever we look at owner's earnings valuation, we're looking at somewhere between $53 to $73 per share. When we put everything together, we're looking at a fair value of between $50 and $50 and $49. So right now it is selling at $44. If we were to put a 20% margin of safety, the average will be average price to enter will be somewhere around $39 to $40. If we were to go for a 15%, that would be close to $42. What I will be doing, and this is not a recommendation for you, I will be looking at possibly a bad earnings coming up, dropping to $40 or a little bit under $40, and buy my second half of the position. And what I'm looking at is I do believe that the merger will happen. I think that for the next 4 or 5 years, that will be a good investment. So I'm looking to get some money on the arbitrage from the Albertson, and then get a little extra with the Kroger in the other side. So with that said, that's my opinion. If you have any comments or disagreement with my analysis, if there's something that I missed, please send me a message. If you find value on this video, please leave a like. It would be even better if you subscribe. Thank you very much, and I will see you again in the next video, and have a nice one.